I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and advisor in Edmonton. Welcome back to the show, Hilliard.
Hello, Jim.
We've been worried about the Canadian debt to income ratio. A number of different ways have been used to calculate it. What's an accurate way to do it, and just how bad is that ratio to debt to income?
Well, it's one of the highest in the world, of course, so there's only a handful of maybe 2 or 3, 4 maybe countries where the household debt ratio is higher, and there's a couple of different ways to measure it. The one that came out recently showed a slight decline from 167.2 to 166.9. That's the debt to income. But the better one, and it's more internationally recognized, is the household debt to GDP ratio, and that's where Canada stands almost second to none. And it's about 100% of GDP. So the GDP, the annual GDP, is equal to about the debt, which is an interesting equivalence, because you can easily calculate then what the cost would be of an increase in interest rates, because the other thing that happened this week was the announcement by the Bank of Canada, the release of their semi-annual financial system review, but also a couple of speeches by the governor and the deputy governor indicating they might be raising interest rates, which pushed the Canadian dollar quite a bit higher. So if interest rates were to go up 1%, for example, eventually, not right away, because some loans have a fixed interest rate. They don't adjust to the higher rate right away. But eventually, the cost of interest on the economy would go up by 1% as well, given that debt and GDP are roughly equal, just in the household sector. And that's about $18 billion a year of additional interest payments to the lenders, which is it could be a problem, because the people that have the most debt are also the biggest spenders. These are the people that borrow the money are the ones that are out there buying cars and boats and going to hockey games and baseball games and all that kind of stuff. So everybody knows, of course, that the consumer spending is the biggest component of the GDP. So if you saddle them with increased interest payments on their massive debt loads, it would be a real challenge for the GDP or the economy to absorb that without going into a recession.
Now, I wondered, the Edmonton Oilers fans, who, by the way, I think were the best during the entire playoffs, I wondered, how could they pack that building when you have all that unemployment in Edmonton because of the slow oil patch?
It's interesting. I was wondering the same thing, and I talked to there's a group of people I met just, waiting at the restaurant before the game started, one of the games a few months ago, and they've gone to every rink in the NHL system except 1 or 2. They get together once a year and do this trip, and every year they pick a different. So I asked them, I said, what's the cost of Edmonton versus the rest? Because they always sit in roughly the same quality of seat. And the guy said, Edmonton's way, way more expensive. He said it's about 50% higher than the average of the rest of the rinks. I don't know if he's adjusting for the dollar or not, but he said it's about $80 in most rinks they go to, and it's about $120 in Edmonton for the equivalent seat. So Albertans love their hockey, and but also I think the incomes, even with the recession that's gone on for 2 years now, and may or may not be ending, the incomes are still pretty high in Alberta, although there has been lately some signs of weakness. I ran into a fellow that actually was called out of retirement in Calgary, believe it or not, to sell boats. And he was telling me, I said, how does that work? And he said, well, these wake boats are this can't be right, but I think what he said was $160,000 each. And he said, I give people a 20-year mortgage to buy a boat. And so I said, really? And he said, yeah. And he said, their biweekly payments are $400. The gas for a day of boating is about $400 as well. And I said, who are buying these things? He said, it's young people, with good jobs, engineers and stock market traders, he mentioned. And I don't know. There's no words. It's like $160,000 to buy a boat. Now, having said that, I haven't tried wake boating yet, so I gather it's probably quite a bit of fun. But anyway, it's almost as if the consumer spending has to have a sledgehammer, basically applied to the forehead before people will stop spending. It's that powerful, even in a recession.
And of course, if your neighbor's got one, you have to have one.
Well, I think that's right. But then I was thinking, how many people? I guess these things you can have. Well, I don't know. I don't know if you know, Jim, but I'm sure you can have multiple people riding the wake on these wake boats. So wouldn't it make sense to everybody to cooperate and have just one wake boat, and then you have to wait your turn? But I guess everybody wants to have their own version of it. But it just seems crazy. And that's not the only story. So there's hockey tickets, wake boats, and people think nothing. For example, when the Oilers were still in the playoffs, they thought nothing of getting on a plane and going to Anaheim to watch the series there. And the tickets were cheaper than Anaheim. They said it was cheaper to fly to Anaheim, buy the tickets, pay for the restaurant, and come back than it was to go to an Edmonton game in Edmonton. So maybe they were being smart. But I think with the debt loads, going back to the original question, with the debt loads being as high as they are, and of course Alberta being the epicenter of high debt loads, high income and high debt loads. That the days when people are able to do that are limited. I was talking to an acquaintance of mine that runs a chain of bankruptcy trustee offices in Ontario, and he said for the first time, I thought this was quite interesting. He said for the first time, they're actually getting people coming in before they've even missed a single payment. They are approaching because they realize they're not going to be able to ever pay off their debts. And what they've been able to do up till now is when the house price goes up, they've been able to transfer their debts use the equity in the house to pay down their debts, and then just keep going. But and I guess he's starting to see these people come in before they even miss a payment, realizing that there's no way out of the predicament that they're in. It's quite amazing. It's an amazing story, and unfortunately, we're probably getting closer to when we're actually going to see the fallout from some of this stuff. It's been a long time coming, but obviously the debt loads can't increase at this rate for much longer.
How much of a burden is it going to place on the banks once people start doing this more often?
Well, what's interesting is, so getting back to the 1%, so say the interest rates rise by 1%, and that means the big spenders, big borrowers it's going to be a big problem for them in terms of their spending. So their spending goes down, but that money, that interest payment, it actually goes to the lender. So then the question becomes, well, maybe the lender could recycle that money back into new loans, and the economy wouldn't have to slow down. And the scenario I painted was that the economy has to slow down because of this drag of higher interest rates. But the problem with that thing is the lender might be strapped with bad loans. So as soon as somebody can't pay their loan back, then the lender has possibly a loan loss. Presumably they're going to be a loss, because if the guy still had positive equity in his house, he'd just sell his house and pay off his debts, right? So by the time it gets to that point, nobody's got any any equity left in their house. And so now the banks have these loans that have gone bad, and now the banks aren't able to lend money anymore because they've got a serious problem with bad loans, and then they end up with a whole bunch of assets that are difficult to get rid of. The selling of these homes, once the bank seizes them under the foreclosure or power of sale, if there's a lot of it happening at the same time, becomes very difficult unless they put a huge discount on the price. And that has a huge effect on the bank's reserves and the bank's balance sheet and or the lender's balance sheet. And then they basically they go out of the business of being lenders for a while until they can restore their things back to normal. So that actually creates a further problem for the economy, because so much of the Canadian economy has been dependent on people going deeper and deeper into debt and being willing to do that. It's a very precarious situation, and the Bank of Canada referred to this in their semi-annual review that came out and warned about it. And they said that the risk levels have been getting worse in the last 6 months. One interesting thing in that review, which I didn't really see it coming, but it makes sense, is most of the people were qualifying for CMHC insured mortgages, so they only had to put 5% down, as you know. Well, since the rules were tightened, and you and I have talked about this a couple of times in the past, it's much more difficult now to get that insurance. So what people are doing is they're going into the less regulated, less strictly controlled area, which requires a 20 to 35% down payment now. Nobody knows where they're getting this extra money. I don't think they've got it just sitting around in the shoebox. Probably they're borrowing it from maybe the Bank of Mom and Dad or some corner payday lender or something. But now they're into this other thing where they have to have these much bigger down payments, and the whole thing is shifted. And instead of fixing the problem, it looks like the changes in the rules have made the problem in a way get worse, because now it's less regulated and less controlled.
We'll have more with Hilliard MacBeth right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Hilliard MacBeth. A recent survey found that 18% of new home buyers dipped into the Bank of Mom and Dad, to help purchase it, either with the down payment or appliances or something. But other people I've talked to in the real estate business say they believe it's higher than 18% because it's more than just mom and dad. It's friends, it's relatives, it's acquaintances. They're willing to chip in on that house, perhaps getting a piece of the equity when they sell it 25 years from now.
Yeah, I think it's much higher than 18%. And one of the reasons that it's underreported is probably there are rules about where you get your down payment from when you go to get an insured mortgage. So people may not be totally honest about where they actually got the money from. And one of the issues that's been raised by several different people is this co-lending thing where you get sort of private lenders helping the person who then goes to the bank with this down payment, which they portray as being savings. But it turns out it's not savings at all. It's been borrowed from a relative or a friend or whoever. And so that's a much riskier loan than the bank and the mortgage insurance company is counting. And that's a symptom of people just, the original premise of my theory was that house prices have gone way beyond what people can afford when you look at incomes. So all of these distortions or these unusual kind of little changes and creative ways of making things happen they come directly from that problem, and that is that people cannot afford these houses. So therefore, they have to find all these unusual and maybe even illegal or secret ways of coming up with the money. And of course, the reason they do it is because they are totally convinced that house prices only go up; they never go down. So it doesn't matter if you're putting yourself into a very risky, precarious debt situation. If house prices rise forever, it doesn't matter. The more you borrow, the more house you buy, the better off you'll be 2 or 3 years down the road. And of course, it's possible that Canada could be different, but every other country and every other time that this has happened, house prices have actually gone down eventually in a crash, usually a crash that devastates these very same people that are finding these creative ways to come up with the money. So there doesn't seem to be any way of reaching people who are thinking about doing this. They get caught up in the hype and in the mania. It really is a mania, and the only way they're going to find out it was a mistake is after the fact, and that's unfortunate because it means visiting that bankruptcy trustee friend of mine in Ontario, or somebody like that. There's a myth in Canada, and it seems to be widespread actually, that Canadians won't default on their mortgages because they can be pursued for their other assets for the shortfall. If the bank can't get the money out of selling the house, the mortgage debt is bigger than what they get on the sale of the house. In Canada and some parts of the U.S., they can go after the defaulter. But the flaw in that thing, which is obvious, really, is the fact that all they have to do is declare personal bankruptcy. And that leads to another myth, which is that somehow personal bankruptcy doesn't include mortgages, but of course it does. So anybody who goes bankrupt is freed up of the obligation to pay for the shortfall when the house is sold. So, of course, people in Canada will. I don't even think if it's a widespread correction in housing prices and the banks have thousands of people, I don't even think they'll bother pursuing them, because what's the point? You pursue them, they declare bankruptcy, you don't get any money, it doesn't make any sense. But we're going to find out, unfortunately, and but there's a lot of myths. It's very interesting how myths get repeated and passed around, and that's one of them that. And we found we actually had a chance to observe this in the U.S. because there were actually, I forget the exact proportion, but it's roughly half of the states in the U.S. have laws where you can pursue the homeowner if he defaults, and other half are non-recourse, which means they can just walk away, and there wasn't really any big difference between the number of defaulters in one or the other categories. It's you can't get blood from a stone, so. If people don't have any money to pay off their mortgage, there's no point in pursuing them. They don't. That doesn't help, and it just costs money to pursue them anyway. So it'll be interesting. There is one jurisdiction in Spain, only one that I'm aware of, where bankruptcy doesn't get you out of your debt obligations regarding housing. So. Very, very, very few people in Spain declare personal bankruptcy because they still have to pay back the money they owe. So it's one of the lowest bankruptcy places in the world for that reason. It doesn't really do you any good. But in Canada and the United States and Ireland and places like that, bankruptcy does relieve you of all of your debts, although it carries a pretty big stigma as well. We'll have more with Hilliard MacBeth right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, A drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Hilliard MacBeth. Hilliard, is it a bad thing for the Bank of Canada and the U.S. Fed to hike interest rates? Because I'm thinking about all those people who might have money in their savings accounts or tax-free accounts. Isn't it about time they actually made some money on them?
Well, yeah, I think I think the abnormal situation that we've been in for a number of years. The Bank of Canada hasn't raised interest rates since 2010, which is an amazing stat on its own. The U.S. government, obviously, the Federal Reserve has raised several times now. The rates have gone from 0, and then Wednesday's increase was it's up to 1 to 1.25%. They actually have a range, so it's about a 1 full percentage point increase. But in both places, it's still below the rate of inflation. The rate of inflation in the U.S. is roughly 1.5% to 2%, depending on which measure you look at. So people that have their money in a savings account, or if they're earning 1% or whatever they're earning, they're losing every minute. They're losing against inflation, and it's not much fun. So I think the reason that the Federal Reserve is making the changes, and I think the Canadian governor of the Bank of Canada is making noises. They haven't actually increased rates, but they're making noises that they might. Is partly just because of the embarrassment that there's been so long, and they've kept rates so low, and of course it leads to distortions in Canada. It leads to the obvious distortion is the housing market going crazy. Not a long-term positive. If it crashes, it's going to cost trillions of dollars, literally, in lost opportunity for many people. So, I think the reason they're doing it and talking about doing it is because it's the right thing to do. Now, having said that, it's going to be a really big headwind to the economy when they actually get around to doing it, if they do, because with the debt levels so high in Canada, much higher than the U.S., by the way. So, we're talking about two different things here. With the debt levels so high in Canada, it's going to be an immediate and difficult hit to the people that are indebted. Yes, it will help the people that have savings, but there are fewer and fewer. There's fewer and fewer of them. The old style save up, your little passbook and go to the bank and all that, and watch the compound interest make your savings account grow. That seems to pretty much have, there's a few dinosaurs still around, but there's very few people actually doing that anymore. So, it'll have a much bigger impact on the people that are indebted, and they're way more numerous, and also, unfortunately for the economy, they're also much bigger spenders than the savers. So the savers, obviously, by definition, are not really big on spending a lot of money. They're the ones that watch the Oilers games on the TV rather than paying hundreds of dollars for a ticket. And they definitely wouldn't buy a wake boat. So those people are, when the money transfers, so what happens is the money transfers, when they raise rates, the money transfers from the indebted people, the consumers, to the savers who tend to hold on to their money. And it can be a real big damper on the economy. Japan went through that. And for 25 years or more now, Japan has been going through that, where the prevailing mentality is to save rather than spend. And the Japanese government has tried everything to try and figure out how to get people to spend more money.
Well, they even tried negative interest rates, so you lost money keeping money in the bank. And in Japan, though, they have a tradition of, they have a word, it's called closet money. And because after the Second World War, they couldn't trust the banks anymore, people just hid money in their house. And they still do it today.
Yeah, so they actually there's actually been a couple of things tried. It's quite interesting that you mentioned that. Once the interest rates are at zero, it doesn't really matter if you have the money in currency or if you have it in your bank, right? It's like it doesn't really make any difference. So people tend to hoard money in the form of currency. So in the 1930s, this became a big problem. And so what they did was in Alberta anyway, they introduced a stamp. So if you had to get this stamp on your money and it had a date on it. So it would say for example, it'd have September 30th, 2017. If you didn't spend the money by September 30th, 2017, it became worthless, and unless you bought another stamp. And this, I don't know what the stamp was, 1 or 2 or 3% or something like that. So it was forcing you to spend the money before it expired. So otherwise, people become hoarders, and so it's I think the central bankers of the world have gotten themselves into a big predicament, and they especially in Canada, they're at a point where they must raise rates, but they can't dare raise rates. So it's an impossible situation. So yesterday they talked about raising rates, but I'm wondering if they're actually. It'll be very interesting to see if they actually do it or not. They're going to have to in a way because of the U.S. raising rates now several times and talking about raising rates more. But I don't think the economy is going to handle it very well, and certainly not the Toronto housing market.
Well, in BC, the average house owner has already lost $100,000 in value, but the real estate boards don't tell you that because their stats are so far behind reality.
Yeah, that the index that just came out, the Terranet National Bank Index, it's based on the prices when they get to land titles, and everybody knows it sometimes takes 2 or 3 months to register a transaction at land titles, and so the numbers for Toronto, for example, that came out were a record increase, and yet the Zolo, one of the realtors that has an online service, shows a 5% decrease from April to May in the same area in Toronto in the single family detached homes. So one's showing a record increase, the other one's showing a 5% monthly decrease, which is a huge, obviously 5% in 1 month is a huge drop, and it's a question of timing. I think that eventually all of the indices will start telling us the same story, which is at least in Toronto, there's been a huge change, and the prices are coming down. The number of new listings sort of gives it away. And you think about when prices are rising that rapidly as they were last year, 20% annual increase. People are buying houses. They give up trying to do conditions, and they don't sell their current house before they buy their move up house. So then now they own 2 houses, and then prices start to drop, and a whole bunch of new listings show up, and then you get a panicky situation. So I don't know if that's still happening in Vancouver. I know there was a big drop in prices about a year ago, but things seem to have gone back on the upside again now. So we just don't know what's happening.
And we're still getting the horror stories of people who didn't put conditions on the sale of the house or the condo. They get into it, and things don't work. Plumbing leaks. Electrical outlets don't have any power to them. The floorboards are warped and wobbly. And then they go, well, I crossed out the thing about conditions. I mean, why would you make the biggest purchase of your life and not make sure it was actually what you were buying, what you were paying for?
Well, one of the things is that, of course, when you've bid for a house that you can afford and you've lost out 3 times in a row, the 4th time you bid higher and you give up on trying to put conditions on the which is, for instance, one of the very normal conditions obviously is subject to arranging financing, right? So one of the things that's happening in Toronto, and it'll probably happen in Vancouver and Edmonton and Calgary too, is that when they go to get the mortgage put on the house, the appraisal at the bank is different from the price that they paid, and it's quite a bit lower. And then the bank says, well, I'm sorry, we can only lend 95% of the appraisal amount, not the price you paid. you paid way too much. And so then there's if they didn't put the condition on the purchase, then they got a big problem, because they have to, as everybody knows, I think you can be sued for to go ahead with the transaction, even if you can't go ahead with it, and you will be sued if prices are dropping. The vendor of the property is going to want to get his price, so he's going to sue to try and force you to do it. So it's going to be it'll be a nightmare. But that's a function of a market that was going up very rapidly, and then all of a sudden there's a change, a very, very quick change. And of course that's what happens in these things. It happened. It's been a long time since it happened, but it happened in the 80s in Alberta and in the early 90s in Toronto, and I guess might be happening again now too.
Hilliard, thank you so much for chatting with us.
It's great to talk to you, Jim.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.